Hello, everybody, and welcome to Hedgeye NexGen. This is where we are going to continue to break down finance into its simplest form and help you build wealth. So I'm Ryan Ricci, and we are joined this week by Hedgeye food analyst, Bennett Shear.
It's great to be here, Richie.
Man, I really look fucking short. Holy cow.
Maybe we should have sat. No, it's my first time. It's my second time on the podcast.
Second time.
And thank you for having me. It should be a great conversation today, and looking forward to getting into it, hearing what you have to say, and breaking it all down.
Yeah, I mean, maybe the listeners are confused, but we're standing.
We're standing?
We're standing. We're in a new studio. We're on YouTube TV. I mean, long time chatter, though. For all the people who want to chat to us on the YouTube.
I am very, very deep in the chat logs of the Hedge AI podcasts chain. It makes for a more effective conversation. I would implore anybody watching to send us some questions, and we'll be monitoring and answering anything.
Everything and anything. We have a pretty exciting episode this man. Yeah, we'll see how this whole standing goes. Anyway, we'll keep focused here. All right. Since we're actually trying to get onto the TikTok, so they keep wanting me to do what's actually going on in the news. So we're going to be doing some Trumponomics, and what we put a more PG episode title on what we're doing. They said Trumponomics. I'm calling it delusional or not delusional. We'll find out.
Love it.
I like it too. So we're going to be we're going to go through a couple of clips. Trump was talking a lot about economics. We're trying to figure out, is he delusional or not delusional? Maybe a little bit of both. So I think we'll just run through the first clip.
Let's roll it.
Clip me. I don't think he was ready for that, but that's okay. He wants me to keep talking on this.
Usually, clip that, by the way, is not a good thing. Hey, clip that. Usually, that's not a positive sentiment to make. So
it's not. It's pretty funny.
So what's this first clip? Preview the first clip.
I'll preview the first clip. Thank you. So basically, like last week, maybe about a week ago, 2 weeks ago, Trump was talking about where the economy is, where is inflation, and he was just saying, I would say, a lot of questionable things. Okay, he had 4 really big points overall. One was about we're at the low point in inflation, that food costs are down, but overall, I think he got me going. Tee it up, and we'll roll the clip now. There's the guy. Love that hair.
At the highest inflation in history, and we now are at a very low point. We're going to be hitting 1.5% pretty soon. So we're at a low point, and he was a high point. We did that. Food prices are way down. It's all coming down. And the biggest decrease, of course, is energy. And, as goes energy, goes everything else. Because when energy comes down, the oil, the electric, I think you're going to see $2 gasoline or something very close to that. In fact, we're already in the twos. But I think you're going to be seeing very soon $2 gasoline. That's like the equivalent of a massive tax cut. But in addition to that, the great big beautiful bill.
There. I think we'll stop it there. Okay, so, all right. So I know you couldn't hear
As you heard the man.
As you heard the man, here's what we got, okay? We got 4 points here, all right? Biden was the high point in inflation, okay? He is now the low point of inflation. The food costs are down, and energy is down. So we're going to go point by point here, and we'll play our little game. So let's start off with the first chart, okay? I love this chart. I mean, it's a very basic chart. It just kind of shows you where is inflation and where has it been historically. So really, all we're trying to do is just give some historical context on where inflation is. It's currently at up 3%. On a year-over-year basis. You can see the little bit of a bump over there in 2022, and you can see the much larger bump back in the 80s, okay? We show this chart maybe every single NexGen episode. I guess we love the topic of inflation out here. But let's go into this. We'll go into this next slide, okay? Because we want to let's focus on what he was saying, and we'll break it down. So if you just take it for what it is, and just just take headline inflation for what it is. Yes, he technically got out in January 2021, which was technically is right before when inflation started to ramp. And yes, Biden was there during the high point, so we'll give him a not delusional on that one. That's
Okay.
good.
Check.
One not delusional, and then you can see when Biden went out, and you can see now inflation where it was when Biden went out was up 3%, and where it is today, it's up 3% year over year. So I'm not really a mathematician on this, but that's the same inflation. And so let's go to his next point here is it a low point? So no, inflation was not a low point in that previous chart. It's not a low point here. So we like to look at M2 over here. So headline inflation, just for everybody, is a big basket of overall goods. It's okay at measuring inflation. It misses a lot of it. M2 is a lot closer to the real inflation in the economy. So that's why we've always looked at M2 also as a proxy to the basket of goods that's in CPI. So CPI on that basis, no, that was not a low point. And so now we look at this chart of M2, and you can see since December, it is up. So once again, we are looking at not a low point.
Not a low point.
That is not a low point at all. Okay? And so, and by the way, if you were mad about the previous chart of the headline inflation and, hey, Trump also got about when he got in and out, don't worry. We're actually going to break that down even further in the last slide. So that's called a cliffhanger right there. Don't you worry. So now what we're going to do here is, let's go to we're going to go to point number 3, okay? We're going to go to point number 3, is the food down?
About time we got to food. Happening too late in this.
Hedgeye food should have happened first, huh?
What do you have on food?
Food prices. Let's see if they're up or down. And the survey says they are up.
Yeah, I mean, and you saw the spike, right? You saw the spike in commodities. You're seeing that broad level of inflation now, right?
Yes.
In a lot of the protein basket. You're seeing deflationary tendencies in fruit and veggies. And then pinpointed price hikes and easing. Avocados is one that's been swinging most recently, and protein obviously is one that is coming down. I believe it peaked in kind of that October timeframe, which wasn't great for a lot of specifically restaurant stocks and companies reporting earnings and looking at the outlook for specifically the full year 25 with protein up. It's interesting, Richie, and just a comment on this. You bring up food at home. The gap between food at home, food away from home, is the divergence on a 1-year stack is notable. But then when you parse that out and you look at the 2 and 3 year stacks as well, I mean, you're looking at hundreds of basis points.
Really?
In the difference there, and so
really,
so food away from home continues to be higher.
I also continues to be higher.
Continues to be higher.
So I actually did him a service by showing this. Is that what I'm getting at?
That's I think what you're getting at. But I'll turn it back over to you.
So I think what also you're saying there is, yes, there are some commodities that are going down, right? And I think you said poultry, avocados. We've shown tea prices. I think potato prices. Yes, there are some one-offs of prices going down.
Pinpointed, yep.
Right? But when you look at the whole basket as a whole, the answer is no, they're not going down. They're actually going up. So on our third point on delusional or not delusional, we're going delusional. And so we'll go to this fourth point here. Don't worry, guys. We're getting to actually what's going to be my favorite part in a couple of minutes. Energy prices. So yes, actually, energy prices are coming down, and they did come down since he took office. So you can see the blue. We'll start with the black line. All right, that's crude oil prices. And yes, he is also right when he says that crude oil prices will run through the entire economy. So you want to get crude oil prices down. Also, that is very true, and that is a thing. And we actually publish a little bit of a nowcast of where inflation's going, and we also have it peaking in the next couple of months. Okay. So what does that all mean? Is yes, crude oil is coming down. Yes, we also have it coming down, but let's not forget we're at inflation at up 3%. When we're talking about it coming down, we're talking about a year over year. So it's not going up as fast. That's the key here.
Right.
It's not actually coming down, it's just not going up as fast. And you're already above the levels. If you looked at inflation from 98 to 2019, if that was inflation, the average was inflation at 2.1%. We've been above 3% ever since it's been about 5 years, okay? That's what's going on. And then when we look at this blue line over here, this is just your U.S. national average of gasoline. I think he said that this was going to go into the 2s. I mean, we'll see. It's basically flat. But, you know, you got to give him credit where credit's due. Yes, energy prices, they are coming down. But here is the thing that he is missing. Just completely. Never forget these words, everybody. Inflation is cumulative, okay? Inflation is cumulative, okay? So if you want inflation to come down, actually, you need negative year-over-year numbers. We're at plus 3%. That is not negative. That's not where it was before 2019. That's pretty high inflation by all measures, okay? So you need things to be negative for inflation to actually come down. So meaningfully,
right.
But what the actual consumer is feeling has nothing to do with year-over-year inflation, really. They're anchored on what happened since 2020. That's what they're all anchored on, okay? And so CPI since 2020 is up 25%, okay? M2, the actual inflation, we do it since 2019. Why 2019? Because stimulus checks came out, and so M2 happens before CPI, and then CPI gets hit. Either way, since 2019, you have M2 is up 45%. So if you're an American out there and you don't have a 25% raise or a 45% raise in the last 5 years, you've actually lost money. You've actually had to pay decrease. And this, Trump, is what everybody actually cares about. So we'll go to this next slide. So what we do is we look at what are people's actual wages over the same time frame. Are your wages up that much? And the survey shows that most likely the average wages and salaries in the private industry over the same time period since 2019, they're only up 23.6%. Inflation is up 25.2%. What does that mean? Your wages, you've taken a pay cut of 2% since 2025. And then if you actually compare it versus the actual real inflation, which is a lot closer to M2, you're actually down 19%. A 19% pay cut ever since 2019.
Wow.
That is actually what's going on in real economics and why everybody is pretty pissed off right now.
Yeah, it's interesting. We've seen hourly earnings within the restaurant space specifically. Our hourly earnings have come down, right? They came down from really that late 24 range.
Yeah.
At around in terms of growth, year-over-year growth at around the higher to mid single digits, the 6% range. Now in June, May and June ran 4%.
Okay.
Right, so you're seeing hourly earnings come down. It's interesting that chart and looking at the discrepancy between those. So
yeah, because overall you need those wages to keep pace with inflation and/or be higher.
True.
Otherwise, the rest of the economy is not going to be happy.
Yeah, I mean, like where consumers put their dollars, right? We've seen this in chain restaurants, right? We're not talking about, people have to eat, right? The propensity to consume is always there for the consumer, and thinking about food is just one element, but obviously one that I'm hyper fixated on in my role, but interesting there.
Boys got to eat.
Boys got to eat.
We need to eat here at Hedgeye. We didn't get to eat on Thursday.
Didn't get to eat.
We
I got to eat. I ate.
You ate? I didn't eat. I didn't eat till about noon. It's all right, everybody. We eventually ate. Inside Hedgeye jokes on that one. All right. So what happens when people can't afford anything and your wages start to go down?
Not a great setup.
No, it's not a great setup at all. And what happens when it's been going like that for, I don't know, for 5 years?
Not a great
Also
setup.
not a great setup. So here's the thing, Sir Trump. All hail Trump. No, I'm just kidding. Just kidding.
You're back and forth.
You're
really.
Well, that's the thing. Well, I believe in many things, and I just believe in the truth.
I do too. Keep going.
Okay. Anyway, here's what we're doing. Let's look. This goes into everything. So if you want to see why people are annoyed with the economy, right? Obviously, he's getting annoyed that people aren't happy with the economy. He doesn't get it. Here's one of the best charts we have. These are all my favorite charts about to come up. It's the gap between your actual median income and what it takes to actually qualify for a home. To be qualified for a home today, so that's basically the qualified income, the income you need to buy the median household. You need to have a wage of about $121,000. The actual median wage is about $80,000 a year.
Wow.
Okay? These people need a 50% raise in order to afford the average home, the median home. Okay? So not only do they have to keep pace with inflation, they need a 50% raise on top of that.
Crazy.
To afford the median home. Okay? So what happens when all that happens? You just go to the next chart. 77% of U.S. households, they can't afford the median priced home. Okay? That's not good. 77%. Median is the middle, so you have quite a little bit of a gap there going. So then what starts to happen? Well, us young people, we can't afford these homes. We got to go live with our parents. And that kind of sucks. Not great. So we have all...
I'm more caught up, and you classify yourself as young. I mean, I thought... Keep going.
I'm kind of young.
You're trendy. You're trendy.
Yes, I want to be a Zoomer. That's where I really want to be. But I think I'm 28.
This slide is interesting though,
Yeah.
in terms of and Keith talks about it all the time too, the dependency on your parents, and
Yeah.
there's I don't know the stat, but the exact number, but the dependency, the amount of parents paying and supporting their children is at an alarming rate, right? A fairly large step up from what it's been previously, but
I have that number actually. I did not include it in here, but we do.
it's just
have that
it's
number.
interesting, right? And you see it too. I mean, I see it as a 25-year-old, but being, in this circle, it's like, oh, well, how are you being supported? How are these people going on all these trips and living, right? And it's like, oh, well,
My parents.
I have a little help. It's like, oh, okay.
Yeah. 78% of Gen Z homeowners had financial assistance for their down payment.
Interesting.
So they're not really affording the home, and then the ones that can't afford the home, 78% of the time, you have to get financial assistance from your parents.
Yeah.
That's not degrading. But anyway, this next chart that we're showing here is, you're at an all-time home of multi-generational households. It just means people living with other people because they can't afford it. Okay? Why can't you afford it? Well, you've had a 2% pay cut in the last 5 years. That might have something to do with it. So then we just go to this next chart here. So the average age of a first-time home buyer. What is it? 38 years old.
Oof.
38.
Wow. That's kind of a depressing statistic.
That's bad.
And probably why we've seen, the outlook, all the, the confidence statistics in October on not just, current expectations, but future expectations have been in the gutter, right? And I think that people are coming to grips with, hey, this isn't great.
Because it's not.
Because it's not.
It's like,
and at the end of the day, right, it's like, especially if you're, in that pocket, that 25 to 34 pocket, right, of that, young adult income demographic, you understand, holy shit, like it's, 38, that's light years down the line. But then, also, a lot of our restaurant companies, right, noting pressure in that cohort, right? And it's all just coming into the fact of, oh my gosh, like, trouble. The midpoint of the K is in trouble.
Yeah.
Confidence in the midpoint of the K is down 25% in
Holy
October.
cow.
And it's sequentially declining. I don't obviously no November number, but that confidence isn't getting good. So I apologize.
No, it's all part of this. And like I think, here's the thing. When us kids, It's actually very predictable behavior, especially you can start with when you're a baby. How does a baby learn? It mocks its parents. Even when you grow up, now we like to say that we don't mock our parents, but really what we're doing out there is we're trying to live up to our parents' expectations and mock our parents. That is, for most of people, a driving force of their life, okay? So now you look at the current economy and you're like, well, okay, at 38 is when you're a first-time home buyer.
I see where you're going, yep.
Right? What were your parents doing at 38? They may have had 2 kids on their second home. Maybe the mom was able to stay at home if you were lucky.
Yeah.
That was still a thing back then, right? That's what was going on when they were 38 years old, right? You might have had brothers, right? And your parents were turning 40, you're making fun of them, buying them diapers, right? Now, the average person, 38 years old, well, you're living at home with your parents.
Right.
If you want to afford the home, you have to get help from your parents. And you most likely, this is the average age is 38, you probably don't own a home.
Crazy.
And you know what else starts to happen at 38? You might actually want a family.
Yeah. Who knows?
But, well, here's the thing. I don't know how much you've looked into this, but allegedly the females are on a clock with the reproductive cycle, around 40.
Oh, gosh. I haven't looked into that, Richie.
You don't know this?
I appreciate you bringing it up.
Yeah, so well, see, this is what... So I got married, and my wife was very on top of me of, hey, I have this thing called a cycle, and at about the age of 40, you can't really have kids.
Oh, God.
Once you start...
Hey, listen, you got to do what you got to do.
Life cycles.
Life cycles.
You'll get, see, as the older fella here.
Thank you. Finally, the acknowledgement.
You'll learn all this.
But back to this confidence piece, it can't make Americans happy.
Well, those will be the next slides, but not yet. Not yet.
Right.
Give 1 second on this. Yeah, so they have a ticking,
Yes.
right, of when they're able to reproduce. Okay, that's just a fact. Don't get mad at me or yell at me. Just a fact. Okay, it's around the age of 40.
Okay.
If you're trying to start your family at 38, well, it's going to be harder to get a kid, right? The clock, your natural clock is that you want to have all of this closer to 35, closer to 20. Throughout, that's 10 years that you're living at home trying to make ends meet. That's bad.
Yeah.
That's depressing because we're also putting ourselves up against our parents. And of course, that leads us to the happiness. So obviously America's happiness, we'll put that in this next slide, right? It's declining, it's been declining. No shock out of everything we've been saying. But I think this next one is probably one of my favorite charts is the skew of happiness, okay? If on this next chart, if you're 60 plus years old, you're actually the 10th happiest in the world in terms of world happiness, that's pretty good. Well, top 10, we'll take that. If you're under 30, in terms of countries, the person is the 62nd happiest if you're under 30 in the US. That's deplorable. That's bad, right? That just shows the overall gap of people. And the younger you get, the unhappier you are. That is just showing you the gap between the two cohorts. So of course Trump's like, what's going wrong with this economy? I'm on my 4th or 5th house over here, while the rest of us can't afford homes, can't afford all this. There is no wealth for us. It's not looking good. We have to live at home with our parents. We can't afford the home, right? All of this starts to build on it themselves, and this is overall the economy that people are unhappy with. Sir,
Might be on my way to Croatia.
Is Croatia happy?
Countries rank happier for those under 30. I mean,
Croatia.
That might be.
Actually, so what that says is the people in Croatia, the 30-year-olds are happier than the 60-plus-year-olds.
There we go.
That's the car of the skew we got to be on. Yeah, I wish I had this thing. We could pull up the people that are happier. But I can tell you, 62nd is towards the bottom. I think they only do about 100 countries.
It's not great.
It's really
60
bad.
It's not great.
It's really bad. So this all brings us to the last part of not this episode, but of this section of the episode is fertility rates, right? They're dropping. This shouldn't be any surprise based off everything that we've shown, right? If you can't afford all of this and the basic stuff, your fertility rate goes down. The replacement rate, if you want to keep a culture alive, essentially, you need to have 2.1 kids. Every female has to have 2.1 kids. The current rate is about 1.7, 1.8, okay? And the more that you cannot afford all this stuff, the lower that goes. It bottomed at 1.62%, which is pretty crazy. So what does that really ultimately mean for, who cares about fertility? Really it means is the culture of the U.S. would actually go down and or be replaced by somebody or something that has a higher fertility rate. And because we can't reproduce, we're not reproducing enough, which is pretty interesting for the folks back home. So yeah, all of this is connected. So to Trump, this is the economy that people are unhappy about. All right, they're not really buying this. The inflation's at a low point. They all know my wages are down. I can't afford things because really over the last 5 years I've had a pay cut of 2%, and that's not that good. So maybe hopefully that helps them out. Maybe. We can only hope so. We're going to go to the next part of that clip, which I think started from the 38-second mark to the end.
Scott. And then you have no tax on tips, no tax on Social Security, and no tax on overtime for the middle income and for even, frankly, anybody. But you have no tax, and the no tax on tips has turned out to be a tremendous thing. But when you think no tax on tips, no tax on overtime, and no tax on Social Security for our seniors, it's the great big beautiful bill, which has been mischaracterized. But now people they don't want to talk about it because it's so good, the enemy, because it's so good for everybody. It's the greatest piece of legislation ever passed in the history of our country in terms of size.
So what he was talking about in that was the big beautiful bill,
right?
And so he said it's the greatest bill that's ever been said or ever been made. He said it's the biggest bill, which actually it is the biggest bill.
Technically,
technically speaking, it is the biggest bill. But he was also talking about no tax on tips and other tax things. But I actually have a question for you here.
Please.
Do you know what's the hidden tax on the people?
I don't know. Are you going to give me a rate?
No, it's not a rate.
Oh, what
is
the hidden tax?
It's a thing.
I don't know the hidden tax.
Well, do you want to take a guess? I don't know. Or do you not want to take a guess?
Tell me.
I'll tell you. Inflation. Inflation is the biggest hidden tax because why? Your wages,
everything
goes down. Yeah. If inflation is up higher than your wages, you're getting taxed. So biggest tax on the people is inflation. And what causes inflation? Government spending going up. So let's look at this big beautiful bill here. So the blue chart is the CBO. Basically, they put out projections. What will inflation be? What will our deficit grow at? That's what this is trying to show. Okay? That's what it was the blue bar. Then after, there is some nice people, what they did was they said, what happens if you add in the big beautiful bill? What would happen to the CBO projections? Well, what happens is our deficit gets larger. So what does that do? If your deficit's going to grow and grow at an accelerating rate than what it was before, you're going to cause inflation. And so yes, overall, some people might get some no tax on tips and so forth. But the biggest thing is overall, it's going to cause inflation because it's an increase in spending, and that is overall not good for people. Because also, guys, since our debt is at about 38 trillion, and climbing, maybe 39, 40 trillion. I'm not really sure. It keeps going up every single day, right? That'll go up more and quicker. is what this is all showing you. And so I'll go to this next slide, which we've been showing. Next to the inflation chart, we might have been showing this slide for now, every single one. But just to put these deficits into context, okay? If the deficits that are projected are a 7% deficit, okay, or 7%. Okay, I'll just read this because you know what, way easier. The forecast deficit levels for 2026 to 2029 is 7%, 7%, 7.2%, and 6.8%. Those will all be among the largest deficits ever recorded since 1962. The only ones greater than that are from 2008, 2009, 2010, 2020, and 2021. Those are the only ones that have ever eclipsed that, okay? In other words, outside of the depths of the great financial crisis and COVID, these next 4 years will see by far the largest deficits, some of the largest deficits posted over the last 65 years. Okay, and this is despite our current unemployment rate, or full employment rate, is currently at about 4.2%, right? Just a reminder, in the GFC, unemployment hit 10%. COVID hit 14.8%. Okay, so I'm not a mathematician or an economist, and I don't know about you, but I don't think we're in the great financial crisis. And I don't think
Ricci, I majored in math, and it's the highest since basically ever.
Right?
let's just put it how it is. It's remarkable, and it's remarkable to see the outlook in regards to those periods that you mentioned, and then to think, the cadence over the next 4 years, you're going to see that is remarkable.
It's going to get worse.
Yeah,
it's going to get worse, right? So we're not even talking about getting to pre-pandemic levels, right? They're raising it off of already elevated levels, right?
Right.
Remember, the inflation rate from about 1998 to 2019 was about 2.1% on average. We've been above 3% ever since 2020, 2021. Okay, and inflation is cumulative, right? Unbelievable. So it's really not going so good. We have one last clip.
A little clip action.
Yeah, we have another clip.
What's this clip?
This clip is talking about, she's trying to put out tariff dividend checks.
Okay.
To the people. So he's talking about these tariff dividend checks.
Are these the $2,000?
Yeah, like $2,000.
Okay. Gotcha. Okay.
So this is a little bit more recent news.
They put a vague timeline on when Americans might receive tariff dividend checks, an idea he's been floating for weeks.
We're going to be issuing dividends later on, somewhere prior to, probably in the middle of next year, a little bit later than that, of thousands of dollars for individuals of moderate income, middle income. We're going to pay down debt. We have a lot of money from tariffs. If we didn't have tariffs, this nation would be in serious trouble. And we've taken in tremendous amounts of money.
So to make this happen, Congress would actually...
You can run it for a little bit.
...have to pass legislation, and it's not clear if the payments have the support needed to pass it in Congress. Meanwhile, the nonpartisan Committee for a Responsible Federal Budget estimates those dividend checks could cost about $600 billion a year, double what the tariffs are projected to raise. The organization notes that President Trump's tariffs have only raised $100 billion so far, including tariffs that have been ruled illegal pending a Supreme Court.
So he's looking to hand out dividend checks, okay? We have done this experiment before, but before we get to the experiment and what happens when we hand out checks to the people, we'll go to this next chart on these tariffs, okay? So if you haven't been following it, all good. That's fine. That's why we're here. Basically, the Federal Appeals Court said that Trump exceeded his authority with these tariffs. It was basically said that what he did was not legal. So he took on all this money and based on what the courts say, it wasn't legal. Okay, so then we go here to this poly market chart that says will he have to refund these tariffs? The odds are pretty low right now for that. They're saying it's only a 14% chance that he has to give back all that money that he gave. But I will give him credit on this. A pretty good way to not give that money back is to spend it elsewhere.
Quite literally.
So I do think, I mean, sometimes you gotta laugh at this stuff, but I do think that is part of what he's doing is, oh, they're gonna make me give this back. What's a good way for them to not get this money? If I give it to the people and spend it, then, oh well. Okay, that's some chess right there, not bad. I think I would argue maybe instead of giving it to the people, pay down our debt with it. That could help. That could help us out quite a bit. Because let's go to this next chart of we gave out checks in the past. Okay, in fact, Trump also gave out checks in the past. During COVID, this all happened. Okay, back in May of 2020, it's actually the low point of inflation. Trump handed out, it was part of the CARES Act, and he handed out $1,200 checks and $500 per child during COVID. Okay. Funny how that was the low point in inflation, but that's not a coincidence. Either way, then post the election, Biden gets elected in, and then Trump is on his way out, and then there's this maybe you remember this, or it was this bipartisan deal. It was called the Consolidated Appropriations Act, where they gave out checks of $600 per adult and $600 per child. You might remember Trump wanted like $2,000, what have you. Okay. So that happened in 2020. So now let's go back to this 2020 chart, right, where Trump is saying, oh, this is all Biden's fault for inflation. The spending happened during both of these two guys' administration, right? The spending started during Trump's administration. It carried on into Biden. He did even more spending. That is how inflation went up, and that is what happened. So they're both at fault. Nobody's not at fault here, right? They both wanted the economy go up, and they made it go up by doing the control print and to hopefully get reelected in Trump's case, and then in Biden's case to keep the money going. People were pretty happy, okay? You guys are both at fault on that one. But, so anyway, we handed out checks. What happens after we hand out checks? Inflation now climbs up to from 1.4% all the way up to 9.1%.
Crazy.
And during the middle of it, after inflation goes up to 4.2%, Biden hands out another check it's called the American Rescue Plan, for $1,400 per adult and another $1,400 per child. 3 rounds of checks. What happens to inflation? Goes through the roof. So, as we started with this entire show, inflation's cumulative. We all think of our wages since 2020. Okay, you start handing out checks again, it's cumulative. It's just going to build on what's already happened and that we already know to have happened doing this. And so maybe just pay down the debt with that. You want the money to disappear? Okay, let's pay down the debt with that.
There's certainly a lot of that needs to be paid down.
Right, and so, yeah, and also just don't remember, in terms of inflation, where it was from 1998 to all the way to 2019, getting to inflation back then up towards 3% was not normal. It is now the normal, and we haven't had inflation below that average going back until 2021 when we first started handing out these checks. So, that's
interesting.
That's everything I got.
I love it.
That's what I got today.
I love it. 45 minutes in.
45
minutes of meat and potatoes. We were talking about meat and potatoes earlier. That was a meaty presentation, Richie, and one.
Oh wait, we have people talking here.
What do we got?
Oh my God, what's going on here? Guys, we're gonna read these comments, but yeah.
Hopefully, no bad ones.
I hope not. Maybe can you read them and see if there's anything that we can address?
Yes. Let's see here.
Or help.
Parents, from Bob Smith, parents can and will help their children, but their time is limited. The real question is, what will replace them?
What will replace them? What was that?
What will replace them? If so,
help me out.
So if parents, right, they can, I think the real question is that Bob is getting at, parents and can and will help their kids.
Yes.
Right? But who will step in for them eventually? Like what's the outlook there? What does that look like? Like who's going to pick up the slack at some point?
Because the parents are paying for a lot of
Yes.
it. And as they should.
And what does that look like? And I think it's a great question. It's a great question.
What would that look like?
I don't know the answer. I don't know the answer.
Well, I think the morbid answer is their assets get passed along to the children.
Yeah, and I mean that's a
Bob. That is a great question. I don't know the answer.
It's a great question. It's a great thinking.
This is why we love the chat.
That's why we love the next gen. Let's see another one. So should I move to Croatia? Looks nice to me. Croatia. I mean, listen, I gonna have to do some more research on Croatia. This is nice. There was another one in there too.
Well, you know what?
Moldova. I mean, there's. Listen, I mean, we could be Hedgeye International here in a few.
I do like to travel. I think Croatia has some mountains. I think that's part of the Alps. Or am I right?
We used to do this game in the office called Geo Quiz, and we would send it around and get some input. So let's see.
Wait. On this Croatia though,
we're going back to Croatia.
Yeah, of course. We can get some waterfront property. This is not a bad idea. They're happy out there. Waterfront property.
Last question here that I think, if I'm not reading the chat wrong, Tyler says, used to get 88 hours working in one restaurant. Last check I got 56 hours, and I work in 3 restaurants to make up for it. LOL, no questions. Keep up the excellent work. Yeah, I mean, it is remarkable. It's remarkable to see what people are going through. I was in I was in Las Vegas last week for this restaurant conference, the Restaurant Development and Finance Conference. It's really for smaller restaurant chains to get financing to then develop, right?
Yeah.
The Restaurant Finance and Development Conference, hence the name.
Yeah.
And it was interesting, I'm going obviously as a researcher trying to get a pulse on where people are. I had the pleasure of meeting Josh from Ann's House up in Michigan. It's a smaller breakfast chain, and he was the founder there, and he spoke to just the hard time to drive volumes, right? To the outlook for 26, right? Yeah. In terms of competition and getting people going. I went off the strip. I stayed on the strip at the only casino the only hotel without a casino on the strip, which was great. The Vdara, beautiful. But I got off the strip and I went on this what we coined as the Hedgeye food tour. And it was interesting to talk to people not on the street, but in these restaurants, going to El Pollo Loco and In-N-Out and Dutch Brothers and different restaurants like that. And you hear these stories because you say, hey, how's business? How are you doing? What's going on? Are you seeing traffic uplifts? And of course, as a researcher, right, I hear this for my personal work, but also as a fellow human being, one who's grew up working in a lumber yard, you understand the grind and what it takes and going through and being like, wow, like this is actually a really tough environment for a lot of people, right? And oftentimes, everybody's in their own world, right? Yeah. And you lose sight of, wow, other people are really going through it, and it's really a bleak kind of sentiment and position to take, and one that you don't always want to be doom and gloom. Yeah. Right. But at the end of the day, it's an
important one too, and a lot of this has been going on for like 4 to 5 years. Yeah. And it's only been perpetuated, and it's really hard. I think big reason why I do these types of episodes is because really, ultimately, it only will continue the longer that you just keep spending. I think also what this person Tyler was saying is like it's hard for him to get the hours. So many people need the hours, and it's hard for him to get all those hours. We have a question here from. This is great. This is the most active our chat has ever been. Love it. Thoughts on the 50-year mortgages? A lot of thoughts on that. I would say. Everybody who's watched Hedgeye NexGen knows I hate that. I hate paying the bank And so all a 50-year mortgage does is, one, you'll never own a home. I mean, if you're buying a home at 38 and it's 50 years, brings you to about 90.
Right.
Is that math right? 80 or 90? 80 or 90, okay?
Give or take.
So you're ultimately almost never going to own the home. And then the other part of that is you're talking about about a $200 decrease in your monthly interest rate, which is good and big. The problem is it's just going to equate to over millions of dollars in interest that you're going to pay over the course of the 50 years. So really what happens is your bank gets paid a lot and the person gets a marginal benefit. So maybe more people can afford homes, but I don't see that as an answer of getting my banker paid. I hate getting my bankers paid.
It's interesting.
It's like the Monaco. Okay.
Monaco on a budget. Oh man, Richie, we are liftoff here.
What's Monaco?
It's I'm sure Croatia.
Oh,
Croatia
really?
and Monaco on a budget. We're going to. That's awesome. That's awesome, and thank you for that input. We got to.
They shot Game and Thrones in Croatia.
Maybe this is a.
We are learning so much about Croatia right now.
Hedgeye is on the move here. We're getting out of Stamford, Connecticut. We might be.
Well, you know what I can do in Croatia that I can't do in America.
Do I want to know?
Yeah, you can know.
Okay.
I can bet on Polymarket.
That's awesome. That's awesome.
Another reason to go to Croatia.
Well, Richie, no more slides for today.
I have no more slides.
This might be a good time to wrap it up. I think
right.
a great episode, another successful episode of NexGen. I think if there's no more questions in the chat, I think we go. And if there are questions, you can certainly tweet at us at Hedgeye AI, at Hedgeye Food.
Give us a follow. We give out content all day, every day.
All day.
And thank you everybody for joining us. We'll be back at it in 2 weeks. You want us to talk about literally anything, let us know, or let us know in the chat. Come join us. Thank you everybody for joining us. See you next time.